Okay, so welcome to the tutorial for the bull and bear scalping tutorial. So first up, the EA will open a trade. That's the strategy. If a trade is in profit, the position will get a trailing loss. Once the trailing loss is secured with a loss, the EA will open another one. This process will repeat until no enough money to open new positions, or the margin risk will hold opening of a new positions. If the market goes against the trade, a new position will be opened according to the spread value. If EA crosses reverse positions, the resistance factor will be checked and will open a new position when conditions are met. So now let's begin. So first up, we have the open buy positions. If no positions are open, the EA will open position automatically when no other positions are open to match the EA number. That means if you have a manual one, it will open one of the EA one. So lot size, the size of the position, of course, the EA will open, will automatically go to the minimum available if you are under. So press the price decrease position to the next point. This price value, let's say we were at the 4 hours and checked. We have now 20,000 points top to bottom or range. It depends on the chart. So let's say we decided to have 20 open position as maximum of our strategy. I will divide this at half from the points that we measured and get the price decrease points. That means that if it's gonna fall the whole way, we're gonna have something between 10 and 20. It depends on the way it's gonna move up and down, but that's our risk factor. So that's the number of manual open the position that the EA should take in consideration. Next up, the magic number. Magic number is, of course, you have to have it. And I use a system that uses, like, if I have a Nasdaq 100 and 500, 30 and 31, you understand my system at least. You set the distance between the current price of the position, of the value, of the market value, and where the distance to the trailing loss. The next one is the trailing start. The trailing start is when the position is at the said number of profit in points, will have the trailing loss starting to appear. And once again, as soon as the trailing stop appears on the map, it will open automatically the next position. And what's good about the system that I created, this and the points that it will measure, it's a width swap and commission. But you have to know that some market makers do have hidden commissions. So if you do know what's your about commission, if it's a $0.3 or something like that, then you have to see and do it manually. So take bigger numbers just to cover this. So next up is the use the margin limitation. So let's say you are you want to limit your account that will limit your opening trade function. The decrease to open the next one. That means if you are sent, you can do it from here. That way you had some sell positions. They can trigger also a buy signal. That means if we had this one really, really big and in the way the EA crossed over one or two or three sell position, it will trigger a buy position. And of course, you can use it or you can not use it. It's up to you. So the cooldown between trades, it's if all positions close, if all position close, the EA will wait between a new cycle will appear. That's just You can use it to see the positions. And this one is if you can also set a really safety measure a bit hard. This one will close all the positions if the drawdown reach. So it means if you are put in here like 3%, then your maximum account drawdown is 5. You can set this and it will just close all positions if you want to be uh, really safe. I don't use it. And of course, the on off of the enable risk. So enable risk is the stop loss of positions. I don't use it also. Yes. All right. Let's go to some MetaTrader and see how it is. So now I'm on a mini chart. Let's go to what we said before. Go maximum zoom out, tape measure, something like top to bottom. So we have it at 50,000 points. What we can do, let's go to visual mode. Um, and let's see. So 50,000 points. Let's say we risk 20, then we'll do the 5,000 in between positions. And I would say this one could be around half of it and half of it, just to secure, or maybe like this. And the call down, we could have some call down, but it's not really important at the minute. This one won't do anything now because it doesn't cross any other positions or EA or nothing. Let's use the 100%. And this one is on off. Let's see how it does, how it, how it works. For we just do for better. That's nicer. So you can see it opened the position. Of course, we now need to wait until it gets into profit, and then it will open the trailing loss. Remember, we did on the most secure, unrisky measurement of the 4 hours. And I'm checking here on the 1st of January until the March. So as you can see, already had some profits, and I also added on the chart the profit, so you don't have to search for it every time. It's a really nice visual aid. Mhm. Sometimes it's just a waiting game. Of course, you should do optimization or run on a demo account to have this feeling. So as you can see, it made 10 euros or something like that. Of course, it's a really not risky strategy at the moment that we were looking at. Made just a few trades. Okay, let's say you just leave it for the whole year. And let's have a look about, let's jump to, you understand the strategy, but we'll do like this. So now we are on 25,000 range. So the 25,000 range, of course, it's really half of it. You are all welcome to just contact me and we'll do the strategy with you, just optimizing as much as we can. Of course, you can do optimization with the optimization tool, but sometimes it's really helpful to talk to someone and do it together. And so as you can see, we have the position counter on the chart, and also we get the history automatically uploaded on every tick. And we also have the profit. It's still really on the safe side. Let's do day trading, not investing. So now the range on 15 is 16. So it's around 16,000. This one can off. Of course, this one is more risky. But basically, that's what I would suggest people to start with the 4 hours. Of course, it's really uh, slow and low strategy, but until you get more comfortable with the EA. If you want to know what I use, I can send you. I do change it a lot because I have like a fast setting, I have a slow setting, medium setting, but I do like I'm hedging, so I'm using both of them on the same time. So in the range of things, I always turn out happy, at the end of the month to pay rent and to buy stuff. So of course, disclaimer, I don't want you to trade. I don't know if you could lose money. Of course, you can also make money, but it's new. It's your responsibility. Make it enough test and enough calculated risk. and of course risk on your own judgment. So let's say here the drawdown could have been a bit. Let's see in a second. So I'm guessing you understand the point. Of course, if we go to even here, we can go like this and just mm, measure what's going on here. So, it's a 6,000. A 6,000, as you remember, means around 600. Sorry, 600. And this one will be F, something like this. And now it's gonna be a lot more closer to the Mhm. Just a reminder, when I work with I choose the instrument and I say, okay, I'm basically bullish on this one. So I'll do, for example, on one instrument I'll do 20, and on the other I'll do 10. So it doesn't really balance itself. It has to have for your strategy a way. You can also do just bull and be very happy about it. But sometimes they do, if there's a long collapse, I love to have the other one. So if everything goes really, really higher, of course, it was better without any sell positions to be just dragging. But at some point, it's gonna fall. So sometimes it's annoying to see them, but you know that at some point the whole market will turn and they'll be closed again, then I will be happy that I had them the whole time. So sometimes it depends. But you can also do with just one instrument with just one EA, just bullish or just shorting something. Of course, it's usually works on both ways because most of the instruments are a flip of a coin. People wouldn't like to say it because they like to think there's some great financials behind it, but basically it's gonna rise, 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 fall, fall, fall. I'm more of a Nasdaq guy, so I believe in the Nasdaq that it's gonna rise at least 7% each year. So it's easy for me to be bullish on that, on all the indices. So that's my strategy, my personal strategy, using the Nasdaq and indices journals, especially the US ones. So as you can see, this is a risky strategy. It's not like we researched, and the drawdown is a big, almost 50%, which is not 50%, but Right. We are having too much fun for too long. Where are we now? Well, guys, I hope you understand how it works, and I will close the tutorial. See you in the market.